Hello and thank you for watching. My name is Rachel Barnett with Gentle Frog. I'm here to create videos for you to help you understand QuickBooks slightly better than you currently do. If you have any comments, questions, or suggestions, please put them in the chat box. Thank you. When we look at the balance sheet, starting at the top, we expect the bank accounts to be positive. So
Right. Yes.
it isn't always the case, everyone's had a bad day, but theoretically positive.
Yes.
And then accounts receivable, we expect a positive, but it could be a negative.
Okay,
So
what would that
is
mean? Sorry.
um
You're
it's
about
all
to
right. I'm trying. Let me just duplicate my tab and I'll pull up the accounts receivable report and we'll talk about it. So I'm gonna go to reports. I'm gonna go to let's go to accounts receivable aging summary.
Yeah.
So when we look at the AR report, it says all these people owe some money. But what if Craig's Landscape took a deposit and they say, look, I'm gonna redo your whole front yard, but I need a $1,000 deposit or a $10,000 deposit. And the client's like, okay, cool. I'm gonna go do a receive payment. I'm gonna collect the money and I'm going to take the deposit and I'm not going to make like a client deposits account on my balance sheet. I'm just going to leave it in accounts receivable because I'm going to take care of it, make an invoice inside of 30 days. But you are just at this exact moment looking at the balance sheet and so therefore you see it as a negative.
Got it.
So if it's logical for your client, then sure, no problem. But if you look at this and you're like, look, you have like this negative entry and it's from 5 years ago. Dear client, something has gone sideways here.
Okay, great. Oh, that's so helpful. Okay.
Okay, sweet.
Only reason a checking or checking account would be negative is if they overdrew, right? That's the only reason I should have a negative checking account is if they overdrew
Right.
it.
Yeah,
Just
exactly. So
okay.
if your checking account is negative in QuickBooks, it doesn't mean that they overdrew it. It means like in this case, your client had two. Not in this case. It means that in real life, your client has too many things in here. So when they reconcile, they should be not leaving stuff unreconciled. Um,
Okay.
yeah. So
So if their bookkeeping hasn't been finished yet, like
close. Yeah. Let me pull up an example. I think I did 4625. And we'll go 113022. Yes. Let me get these one-time pop-ups to disappear so I can show you the thing that I'm thinking of. Okay, so we'll pretend that like they're reconciling for December and like these things all get marked off. So let me change my clear balance so I can get this to make more
wow.
sense.
Oh, I didn't know you could do that. Wow.
Yeah. So here's what happens, and I was working on one of these this morning, is that the clients will be like, okay, I got my difference to go to zero every single month, therefore I'm fine. And then we're looking at it and we're like, yeah, but like look at all the things that didn't get a check mark. Those
Oh
things
yeah.
impact your balance. And they're like, yeah, but and I'm like, no buts. Like in your check register, it shows that you spent $300.
Oh.
And if that's baloney, then you need to get rid of it because it impacts your balance.
Oh my God. Okay, that makes so much sense. Okay.
Yeah. So my guy this morning, he was fiddling around, wrote a check for 20,000. It drove the checking account into a negative, and he's like, "Oh, this check isn't real." And I'm like, "I know." I'm like, I don't know why you were doing that, but you should delete that because I could see you made it an hour ago, and like this is not helping you.
It's
um,
like it's
yeah.
a video game.
Exactly. So what I do is I like clients will talk about how the difference went to zero and they reconciled and you're like, cool beans, but let me click finish now and I'll just show you a shortcut for how to find this stuff. Um, so if you go to the bank register and you're like, my ending balance in the upper right hand corner is not correct, like it's just weird, then you can say, all right, this thing is reconciled through 1231, which I see on the left. And then you're like, well, in this example, there's 44 things, but we'll pretend like there's 4 million things.
Okay.
I click on the funnel. I say, show me the stuff that is not reconciled. I'll say from 1/1/2000 through 12/31/22. So I'm just grabbing this number and putting it down here.
Got it.
Okay. So I'm asking QuickBooks to filter and only show me the stuff that's unreconciled. And then I can look at the list and be like, okay, of this list, which things are mistakes and which things like is the check going to get cashed later?
Mm-hmm. Mm-hmm.
So yeah, if these numbers are weird, like they're negative or whatever, it could be because of that. It could be that like they have money in the bank account, everything is totally fine, but they double entered stuff.
Yeah. Okay. Okay. So is it accounts payable next?
Yeah, we can jump down to accounts payable.
Okay.
So accounts payable, it's a positive number. Um, if whenever I see this number, I don't care what the number is. I'm always like, well, let me just go to my report. And so I'm
Okay.
going to search for it because it's faster than scrolling. When I look at my accounts payable, I should only see money that I owe. But every so often, the client will have a negative here.
Okay.
And the negative is like they told QuickBooks that they paid a bill or they paid more money than there was a bill, or they gave money to somebody and there was no bill to begin with. And
Okay.
that's a problem or a mistake. So that's
Okay.
harder to visualize. So I'm just going to do it real quick and make an example for us. So the MasterCard, we'll say PG&E gets money, and let's say they get $1,000. So now when I look at this, because I just made a quick example, PG&E shows an overpayment of $900. And that's because I have paid them more money than I have bills for it. And so the
Okay.
next step would just be to look around and see, like, I recognize that you paid, but like, did you mean to overpay? Did you get a credit? Like, I bought something, they're going to give me in-store credit so that I can get a replacement. Or did we just forget to enter the buddy bill?
Okay. So that's definitely an account that, like, if it's not positive, do some investigation. There's a mistake in some way has probably been made.
Very close. Look at
Okay.
this no matter what.
Okay.
Even because like look at if you see this $900 in the negative for PG&E, but if you look at the balance sheet would be a positive number.
Oh,
And
okay.
so you're like, oh, $600, sweet deal. But then if you just look at the one summary report, you're like, oh, we need to talk.
I do realize we skipped over inventory asset and stuff on the balance sheet after I said is accounts payable next. I was going on some form I made,
Yeah,
and we skipped over undeposited funds. Should
it's
we go
fine.
back? Should we go back to those or just keep going?
We should only focus on the things that you really need to know.
Okay, yeah, I don't have anything with inventory yet, so
Okay.
yeah.
All right. So what's next? Is it credit
Okay.
card?
Yeah, a credit card. And this is something I think I remember, and we're not done setting up his accounts, but the alarm bell went off for me because I think I saw some negative credit card accounts. And then I compared it, I was comparing things to mine. So I definitely would like to know what happens if there's a negative credit card and what that might mean.
What it typically means is that the client has been recording the payments to the credit card, but not recording the charges on the credit card.
Oh,
So
okay. Okay.
if you balance the credit card just like you do the checking account, then unless they really overpaid the credit card, it'll work itself out in the wash because you'll enter whatever's missing.
Perfect. So actually, probably that is what happened because we're not done adding transactions. They added
Yeah.
payments. We haven't added all the transactions yet.
Yep.
Okay. Okay.
Yeah,
Um,
it's totally good. What
okay. So is that kind of the same with a loan payable?
Yeah, exactly.
Okay.
So the loan payable can get weird because they could enter the entire payment. Like say you pay $500 a month for your loan and you assign the entire 500 to loan payable, but if you look at the statement, you can see okay, $200 of it went to the loan and $300 went to interest.
Yes.
When you reconcile, you'll figure that out and you'll fix it. Anybody who's ever had a car loan or a mortgage or anything, you just know that not the whole amount goes towards the loan. Like a
Of
portion of
course.
it does.
Of course. And it's interesting. He has a bunch of loans and he gave me statements, and in none of them and I was just setting up opening balances, but in none of them could I see like what portion is the loan and what portion is the interest. So, that'll just be a problem in the future when he's trying to enter those, and I'll have to help. Of course, when I Googled it, Gentle Frog, how to do it popped up as the first thing and was so much better than the QuickBooks answers because they just talk about paying with a check, and who pays with a check that much anymore? Like,
Right.
so I saved the link. I was so excited about that.
Yay.
Um,
Oh, I'm so glad.
so then Total liabilities, those that should be positive, um,
Right.
positive number. But if we had made those mistakes with our credit card or our loan payable, then it could be a negative, basically.
Right, because of the total liabilities is adding together, my credit card money, my, like, sales tax, whatever, plus my loans, all of it turns into my total liabilities. So if I have tiny loans and credit cards that are negative because I've only posted my payments, then yeah, it'll just turn itself into a negative. I-
Yeah. And
In
then going, oh, sorry, please finish.
it shouldn't be a negative, but you'll figure it out when you fix up your stuff.
And then going back to the basic accounting equation,
Yeah.
in all actuality, liabilities, like in that equation in my head, would kind of be a negative. Like, no, okay. It's
So
liabilities plus equity.
right.
So
Yeah. So
in my,
assets
yeah,
equals
assets
like
have equal liabilities plus equity.
yeah.
So if I charge something and I understand what to do, like in my head, how it works. If I charge something and it becomes an asset, I can understand that. If I charge something and it's an expense,
Mhm.
then my equity must go down. Like, right.
Right.
Okay.
Yeah,
So,
exactly. Is
okay.
it in the way that you'll know, I'll scoot down. When you have an expense, it means that you are reducing your net income.
Income.
So that's how the equity goes down.
And now that's the number that comes from the profit and loss or the income statement. That's the number that transfers over.
Yeah, it's the
Yes.
current year number.
Okay. Thank you.
Yeah.
So, equity now, I mean, we know we're not, I don't even know if I want to talk about opening balance equity because I know that generally tax preparers hate that. So we try not to use that. And instead we, make an opening balance entry. You might have a different opinion on this with retained earnings. So I don't know that I need to discuss opening balance equity.
Okay.
But do you have something you would want to say about that could educate me?
Well, I mean, your opening balances don't come from thin air.
Yeah.
So
Oh,
y-
he's
it's
so profound.
just like how there's no uncategorized asset. So if you use it as your placeholder, like I mean, you have like a junk drawer or whatever at your house or a laundry hamper, you're like, look, I'm gonna put it here for a hot second. I'm gonna deal with it, and then it gets put away properly. I don't care. I wouldn't
Got
leave
it.
it there because that isn't a place that makes sense.
It's like I like the idea, like it's a temporary file. It's like a junk drawer.
Yeah,
Deal with it later.
yeah,
Almost in a way that I know undeposited funds are not a junk drawer, but like it's like you
yeah,
need to come back to this and put it where it belongs, like
right.
kind of a thing.
Yeah.
Uh, okay. So in equity,
Hmm.
oh no, I'm sorry. But I would yes, my retained earnings are negative. So retained earnings would be negative. For my first year of my business, my retained earnings are negative, I think.
Probably.
And
Um,
so that means my business didn't make money. My
cor-
business,
yeah, because the
okay,
returned in earnings is it's the all of the net income or net loss for all the years that you've been in business, not including the current year. So your very first year in business, like most of us had a loss our very first year. So on 12/31 of last year, whatever that number was, it was chilling out down here in net income. And then January 1st, it scoots itself up into retained earnings.
oh, I like that. Okay.
Yeah. Sometimes it's just easier to show people that like I take their profit and loss and I'm like, okay, here's last year, here's this year, and put the 2 years side by side. And I'm like, last year your net income was this, and that's now your retained earnings, and this is this year. And then next year, these two numbers will add together and become your new retained earnings.
Oh, cool. And so I'm going to ask what might be a stupid question because
It's
my
okay.
tax preparer didn't get in my QBO and do that. So when I closed my books for December,
Right.
is that when it did this? Like QBO did that when I closed the books?
QBO doesn't no. It just
No.
magically happens. You
Oh,
do
okay.
not have to do anything to make that happen.
Okay. If I was doing all this by hand, I would have to do something to make that happen, but I'm not. It happens automatically
Correct.
in QBO.
Correct.
Okay. Oh, we skipped owner's draws and owner's investments. So my understanding is owner's draws is the number that would be negative on the balance sheet, and that's okay.
Right.
Or usually, yeah. Okay.
Yeah.
Is there another number on the balance sheet that for a thriving business we would still expect to be negative?
You are gonna see negatives for your depreciation.
Oh yeah. Okay.
Yeah. So that would be normal. It's a tax thing, not a thing that you're like calculating.
Yes.
Um, but it's basically when they shift money over into the expense side. So let's see if I can find. Um, so here's let me see if I can open image in a new tab, make it slightly bigger. Okay, this is random from Google Images. Um, but we have our office equipment, and then there's accumulated depreciation. And so this depreciation is a negative number, and that's expected. So
Okay.
if that happens, it's the tax preparer that does their magic. They send you over journal entries and say, okay, here are the things to change, add whatever into the QuickBooks, and you make that entry. And this number just keeps getting bigger and bigger until eventually the office equipment and the depreciation equal. And then the like asset turns into $0.
So if in the first year of my business, if a few things we made assets for my taxes, then that's something I need to do for my balance sheets.
Right.
Um,
You need to look at your tax return, because your tax return will have a depreciation schedule. Um
okay.
and it will show that. Um
Okay, perfect.
yeah. So if it
Um,
doesn't happen, just ask your tax person, just say, hey, but not right now. Like wait until after April 15th and then be like, I'm just trying to like update my stuff, and do you have any adjusting entries for me? I might have missed them.
that's so funny because I literally have a few questions for her, and I was like, I don't care. Because I also got a business attorney who was like, you might want to ask your new tax preparer why, if you should be an S corp, because most service businesses, she said, are S corps, and I'm an LLC. I'm glad you're making that face because, but, and I was like, I am not asking her yet. Like I am, she's actually in the program that I met you in. Like, I am not asking her. I am waiting. Like, she is so busy. She did my taxes. She's kind. Like, so I'm glad you did that. But my gut was right. Like, leave the woman alone. She's
Yeah,
working 12-hour days.
exactly. The key is to stay on her good side.
Just like an administrative assistant. Like, they're your best friends.
Yeah.
Um, owner's investment. That seems like it'd be real funky if that was negative, because
It
that would,
could, I mean, sure, but like some people want to see their investment and distribution in separate accounts. Other
oh,
people like to see it in one account because they don't want to confuse things.
okay, okay.
So, I mean, in a perfect world, you will have major business successful enough that you can take money out more than you've put in.
Yes. Okay.
Yeah.
Oh, okay. We already talked about retained earnings. Net income, that would negative net. Also, we would want our net income to be positive, but it was negative. We spent more than we earned that year, basically.
Right.
Is that, yeah? Okay.
Exactly. So the net income number, this report goes through 3/8. So the profit and loss through 3/8. Our net income is 917. And if I look at the balance sheet, the net income is 917. So that's exactly it. Like if you spent more than you collected, your net income is a negative.
And that would make sense for a beginning business because they're investing in it. Like a bookkeeper would invest in education, maybe some assets, some supplies, and another business might invest in their location and
Right.
inventory and whatever else. So then we see a total equity being a negative number there. I would love to know what that means.
It's just math.
Okay,
All
it's
all of these numbers added together, that's what it is.
okay. Because we had a negative opening balance.
Right.
Okay. So it basically means it in itself doesn't mean things. It's almost like, well, it can, but the things that cause that are
Right.
why it's negative. Okay.
Yeah, exactly. So it's just math.
Okay.
People get very excited about how the equity should mean something because they think about like the equity in their house.
Yeah.
And it's not like that at all. It's just math. It doesn't mean that somebody feels like Craig's landscape is worth negative $8,000. Um, like you could sell if you had Craig's landscape, and let's assume your business has been around longer than 6 months, you could sell it for more than negative $8,000. So it's not the amount you could sell it for. It's not the amount that it's worth. It's not a representation of your blood, sweat, and tears. It's just math.
Just math. And your total liabilities and equity and your total assets, those, no matter what, are going to equal the same thing because they're on, X equals X. Things, whatever you've entered, QuickBooks or what will adjust things, not adjust, but like what you have entered is causing the total liabilities and equities. So they're going to make sure to match no matter what.
Right, because your debits and credits are always in balance. Your balance sheet is always in balance. If these two numbers don't match, your software is messed up.
I can't think of a situation why those would be negative numbers, your total. Like, I guess if everything was negative,
Yeah, yeah,
it would
I'll
be,
show you.
okay.
Like,
Yeah, they
let's
could. Okay. Yeah.
so if you had written a check, so we'll write a check out of the checking account for advertising, and we'll make it about $1 bajillion. We'll save and close. So now everything is negative, right?
Okay.
Because we took the money out of the checking, which reduced the asset of the checking, and then it went to an expense account, which therefore shows up on the net income, and therefore, like our super balanced numbers are two negative numbers.
And so if those are negative, that would be a bang, 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 like
I
not
mean,
like the accounting was done wrong, but like overspending. Like, so this isn't a good thing to see. Definitely not a good thing to see.
correct. Not a good
Okay.
thing to see. So I wouldn't worry too much about if the grand total is negative, and I would worry about each individual unit. Like if your
Okay.
checking account is negative $100,000, I'd be like, something is wrong with your bookkeeping, or your bank really likes you.
Yeah.
So yeah.
Okay. So since we have a few minutes left, would there be any reason why undeposited funds would be negative? Is
No,
that a common thing? No.
no,
Okay.
that means someone's jacked it up.
Okay.
So undeposited funds is the amount of money that's in your plus new bank deposit.
Yeah.
And so if that's a negative number, then there's something weird going on. So
Okay.
2062, if we go plus new, we go bank deposit, the total is 2062. If you see negative there, then either somebody's making journal entries, or you've connected PayPal. You were doing some stuff, you changed your mind about how you did some stuff, and there's some stuff in here to fix.
Okay.
Um, that is a little harder to demonstrate. It
Yeah.
does happen. I see it, like, because I do training all the time. I'm like, oh, I see it about once a week. And I'm so used to it that I'm like, oh, when this happens, you click here, you delete this. This is why, no big deal. But generally speaking, it should not be negative, and this number should always match the amount of money in bank deposit right here. If it doesn't
Okay.
match, it means somebody's been screwing around with journal entries, and you've got to like unwind and fix a thing.
Okay. Okay. This is so helpful. I honestly was on my walk. I hope others are helped by this too.
Yeah, me too.
It's like, it's almost like a graph that you're like, I don't know how to interpret this graph. And I know I'm supposed to be able to, but I was on my walk being like, man, did I really mess things up that those liabilities were negative? And now I just feel a wave of relief because they have to be, obviously they're negative. We haven't added all the transactions yet. Like,
Right,
per-
yeah. Yeah, you're
okay,
you're on your way. So,
yes.
I don't even worry about any of this until I get all my stuff entered and all my stuff reconciled, and I get rid of anything that doesn't clear, unless I'm like, "Oh, that's a check, it'll cash later." Um, After I do all that, then I start looking at my reports, but until then, it would be like looking at dinner that's, like, halfway done. You're like, "Oh, it looks a little bit unappealing." But you're
Awesome.
like, "Right, 'cause I'm
Okay.
not done."
Yes, absolutely. I want to eat that like that. Oh, perfect. Thank you so much for your time,
Yeah,
and your wisdom and
yeah.
patience.